we've always had a balanced approach to investing in our existing homes as well as new developments.
Mm,
And it's about that portfolio. So some of our new developments are higher value in areas that, you get a payback on. And it is a bit like, the rich covering the poor areas. The other thing is you've got to look at what else you can do. So we're just looking at, we're low geared, financially strong. Half of our stock is unencumbered. We've got a strategy to move to EPC C
mm.
because we know zero on some of our older stock might not be achievable at all. And the target is 2050 at the moment. So let's see whether things change. But I think financially you can do a bit more. So we're moving to EBITDA, dropping the MRI bit. That gives us a bit more of a
Right.
cushion. We're looking at refinancing and how we can do things better, efficiencies. I think you've got to put all the ingredients into the pie and look at what that looks like before you start looking at making decisions in certain areas. So we've always had that sort of strategic approach to things, but we are in a better place than some others that,
Mm.
we haven't got a backlog of repairs. We've invested heavily in our existing homes. We're developing new homes. Creativity, collaboration, sharing the costs with others. So it's that whole systems approach to us, and it seems to be working at the moment.